Hi, this is James Zhang, and today we're going to be talking about a podcast slash ebook that Seth Godin put out called The Startup School. And in that book, he talks about starting something. And, Tim Ferriss says, start something that builds skills and relationships, and you can ratchet those up over time. And we recently had an interview with David Moore, and he said, essentially, how did I grow from 0 to 25,000 units? And it was treating this like a business. And so your general partnership that you're starting right now, how do you treat that as a business? And we're going to look at 5 themes really that I pulled out of this series. Number 1, why are you doing it? Number 2, the customer. Number 3, marketing. Number 4, retention. And number 5, action. So let's start. Every general partner who has ever been in the equity raising process, they're essentially like, this is me, this is my investment. And, people either shun them and say, nah, forget it, that's not my deal. Or they raise their hand and say, yep, I'm going to ride this with you. And here's my money. So let's start getting into it. So number 1, what is your project, right? So is it going to be a 100-unit deal, 200-unit deal, 300-unit deal? Depending on where you are in the process, that's going to drive sort of your focus, right? So what market are you going to be in? And then who are the listing brokers that are going to help you do that? And then as you grow over time, right? So if you have one property that's 8 units or 10 units or 20 units, you're a freelancer, right? Like essentially you're going to do work and that's the only way you're going to get paid. And then even I would say a general partner with 1 or 2 properties, maybe the property is considered a business, but in essence, you're working in that business, right? Because you are finding the deal, raising the equity, doing all the work on it. But eventually, if you're going to scale to the size of David Moore at Nightvest and have 25,000 units, you're going to build a big business bigger than yourself, right? And that's where you really become an entrepreneur. That's where you have a CFO, you have an investor relations director, you have a president of your property management company. So you just have to decide, right? Like when you're starting, are you going to be a freelancer or an entrepreneur? Or are you going to be, and if if you're going to be an independent owner and just buy one property, right? So it's sort of looking at your project and deciding, all right, why am I doing this? What am I in it for? Second thing is your customer, right? So who's the customer? How are they going to pay you, right? There's really 3 ways that they can pay you. They can pay you in cash, attention, referral. What are they hiring that product to do, your product to do? And then what's the problem that they're waking up with, right? It's always easier to sell someone on a problem that they're having. And essentially, how are you creating value for the customer, right? So, as a general partner, you have a lot of customers, right? You have tenants, you have limited partners, you have listing brokers, you have lenders, you have all these people. But essentially, when you think about the tenants and the limited partners, right? So the tenants are paying you in cash, and limited partners are giving you cash to buy the property. And in terms of tenants, they're really hiring you to give them safe, affordable housing and a place to live, right? Whereas the limited partners, they're hiring your product, and it's sort of difficult to think about this way, but they're essentially hiring your investment to produce passive returns for them, right? Because in essence, you're providing value by finding the deal, raising the equity, signing on the loan, managing the property, and then increasing the value of the property. Most limited partners can't do that, right? They don't have the relationships with the listing brokers. They don't have the ability to raise equity from other people. They don't have the net worth and liquidity to sign on the loan. And they don't want to manage the property. And they don't know how to increase the value of the property. And so you doing all of that, you're creating a ton of value for the customer. And so, don't be ashamed of charging a fee or taking equity because you're doing a lot and creating a lot of value for that customer. All right, marketing now. So how are you telling your story, whether that's the properties story or you as the investor? What's the channel? How are you going to show up number 1 on Google? And then how's the act of running the business making your funnel better? And who are the leaders who are leaders of tribes of your customers, right? So in terms of telling your story, whether that's video, email, conferences, speaking at conferences, webinars, think about your channels, right? So there's all these, I don't know that many people who watch TV anymore. So think about YouTube, Facebook, LinkedIn, podcasts, conferences. How are you showing up, right? So if someone Googles your name, you should definitely be number 1. But then if they start Googling multifamily, in your city, does your name come up, right? And so how can you start leveraging, your track record also, right? So let's say you get your first deal done. how can you start leveraging that investment, right? So how do you start thinking about your limited partners and getting referrals from your limited partners, right? How can you make them more engaged with your current investment and your current property? And I think that's a huge advantage once you get that first deal done. Is I think you should be having property tours at the property. You should be thinking about how limited partners can eventually become, you know, referral sources for you. And as you think about more and more limited partners, or growing your base of limited partners, think about your background, right? And I've seen a lot of people who have been successful in saying, look, I used to be a physician, I used to be an engineer, and so a lot of my network is those people. And so I just have to teach them about real estate, and then they will connect with, and I know exactly what those people felt. And so thinking about that is always a great way of sort of niching down into that class and that investment side of it. All right, retention. Um, like you have to build the control connection with your customer and sort of have a monopoly on the attention, and then also creating lock in, and then potentially even connecting people, right? So everything that we use today is a connection with other people. So in terms of control connection, email and phone number are number one. I would say, because right now, Facebook, LinkedIn, YouTube, Instagram, all those things are the platform of choice, but you really don't have control over that connection. So think about targeted emails and lock in for your business. So I've seen some general partners do this. I guess is frequent flyer miles. So that airlines use is a huge benefit. But then how do you give that benefit for existing investors, right? So I've seen sometimes existing investors get preference over first time investors. Existing investors might be able to get a little bit more data about the property, a little bit more insight, a little bit more um, you know I haven't seen a higher return necessarily at first, but there are benefits for people who invest more into deals, right? And so thinking about how you create lock-in for your business, and then how are you connecting people, right? Because a lot of limited partners want to become general partners at some point. And so how are you helping limited partners learn about the business? How are you helping them maybe get on the property, increase their knowledge, but then also increase their connection to other people in the business? Last thing here is action. So thinking about what the hard part is in your business, right? How long you're going to try this, right? Before you give up and go do something else. Thinking about minimum viable product, MVP. Why are people willing to cross the street for you? And then how are you going to start interacting to start building sort of a monopoly on your space, right? So the dip in your business really is finding deals, raising equity. That used to be it, but now it's really around asset management, investor relations, right? So in terms of minimal viable product, I mean, you can always have people send people sort of initial investment packages to sort of see how prospective deals will look, and then potentially also like why is your deal different than other people's? I think that's key. Is why are people willing to cross the street, right? Because a lot of times people are raising equity. There might be 20 deals going at one time, and they're getting all these deals, and you have to stand out. So thinking about that, and how are you adding value right now, right, when there are no deals? How do you stay on top of the mind for LPs? And in terms of monopoly, I think about it as if you got a deal a month or a deal a quarter, could you get every deal confidently funded? And thinking about the size of your list, thinking about um, the connection you have with those people. And really, I think that's how you start building a monopoly. And so my background, I've seen this in action. The last 5 years, I've originated over 800 million in multifamily debt across 125 properties nationwide. And so I've seen it, people going from 0 to 1 to 5 properties. And I've also invested with people across, 7,000 units across DFW, Austin, and San Antonio. So I've seen this definitely in the works. So if you'd like to just definitely subscribe to the channel as more stuff comes out, like the video, join the email list in the banner. You can click there to join the email list. And, wrapping up with this is stop getting your ducks in a row and start something. All right. Thanks a lot, guys.